In May, we saw credit default swaps spike sharply as fears of a US default increased. The swaps jumped 120% in 2 months and then fell 70% after the debt ceiling crisis quote-unquote ended. Here's a chart for the same credit default swaps. The swaps are now up 60% since June, even as we continue to hear that the debt ceiling crisis is over. But on Friday, Moody's cut their US credit outlook from stable to negative. You can see right here, Moody's reaffirmed America's credit rating at the highest AAA level, but expressed concern about the nation's fiscal trajectory amid congressional dysfunction. This comes just a couple months after S&P cut their US credit rating for the first time since 2011. Deficit spending is out of control. Well, the last time we got a catalyst very similar to this, Fitch downgrades the United States long-term ratings to AA+ from AAA, outlook stable, and we just went from stable to negative, which is even worse for Monday. How is the market going to react? Well, that is what we're going to get into in today's video, as well as short squeeze plays for the week to come. So make sure to watch until the end of the video so you don't have to watch another update video here on YouTube. All I ask you guys to do in return, hit the like button, engage the video in any way possible, subscribe if you want to join us on this journey to financial freedom. Let's get into it. So this was August 1st of 2023. This is the last time we got a catalyst similar, even though the catalyst now is even worse because we went from stable to negative, and this outlook was stable. August 1st, 2023. What happened with the S&P 500? How did it react? Does it correlate? August 1st, 2023, back here, the S&P 500 was basically testing a high coming up out of that 2022 decline for the entire year. And this is what happened. Sold off massively, all the way from 458 down to 435. And this is the bars pattern copy and pasted to where we are now when we just got the same exact catalyst. This isn't shrunk. This isn't made bigger. This is just copy and pasted right over. And how does it line up? It lines up perfectly with a couple things. Number one, the box we expected the retracement to come down to, which I said was 425 to 418. That is the level I expect the SPY to come retrace down to before I wanted to re-enter calls. This is what I said. Now we assume the recession is canceled, and this also doesn't break relative lows, so that may be the case. However, is the SPY going to retrace? There's a couple things that make it look strong and a couple things that make it look weak. Overall, we have a negative catalyst. If this does play out closely, right, it doesn't have to play out exact, we could see the SPY come test 418 once again, which is the bottom of that box. Not only is it the bottom of that box, but where does it touch? This is a touch point at where we expect it to retrace. This is a touch point right here at the relative lows around 412 of the SPY where it held support, right? And it's also a touch point where we held support at the bottom of that COVID crash. So not only is it a touch point for a sell-off back here, but it's also a touch point for the recent sell-off and then where we could potentially retrace down to. What do you guys think is about to happen Monday? Do you think this is going to affect the market negatively, or do you think the SPY just has way too much strength going forward? Now, on a more positive note, maybe the US Treasury says they disagree with Moody's shift to negative outlook. They say the US economy remains strong. Do you guys agree or disagree with the negative outlook? As for people being worried, the VIX has been declining, which means there's not a lot of volatility going in the market. You usually see volatility when the SPY wants to sell off, when people are fearful. But as of right now, not much is happening with the VIX. We only got a pop on November 9th, which was a decent pop, came up and rejected off of this trend line on the VIX and is coming back down. I'd watch for a potential bounce at 1375 or 1270 on the VIX, and we want to see a clean break back over $15.75 for that retracement to come. Now, if you look up short squeeze, this is what I find interesting. It's all about cryptocurrency. Cryptos are squeezing right now. Short squeeze alert for November 10th, 2 cryptocurrencies with potential to skyrocket. Short squeeze triggers 206 million in crypto liquidations. Bitcoin price hits 18-month high amid Bitcoin ETF optimism and short squeeze. Bitcoin short squeeze sends Bitcoin price yada yada yada. You guys get the point. Crypto is slaughtering short sellers. They're slaughtering everything. And when this happens, you usually see a lot of strength flowing into the market, a lot of strength flowing into different sectors, random sectors like we saw with the NFT wave, because retail doesn't really know what to do with all of these gains. Now you see Bitcoin rising heavily, Ethereum, Solana. Solana is going crazy, BONK going crazy, XRP, and the list goes on and on. If you guys are in any of these cryptos, let me know in the comments down below. Be careful, because this push in the market and this push in crypto could be just a way for institutions to rug pull retail, because guess what? The last time institutions wanted to run everything up and then sell it off, retail didn't really get scared like they usually do and actually held on for the most part. They also held on at the bottom for the most part in dollar cost average when everything was actually scary. So institutions may be going for a round 2. Just a quick thought. Now, short squeeze stocks that could take off. Looking down the list of all 9, these articles clearly suck. They don't do a lot of research, but I found 2 that maybe have some potential, and then I wanted to throw in another one. And then at the end of the video, I'm going to read you off the short squeeze list that we usually talk about every few months or so, and I think now's the time to start looking at them. So SIEN, a medical aesthetics company based in Irvine, California. We don't really care what the company does. Is it a short squeeze contender? I think it might be. The float is small. There's 5.8 days to cover, and the short interest is sitting around 16%, which is exactly what you'd want for a short squeeze play. Now, volume is low, but it's picking up, especially for a low float. And yesterday, on Friday, we saw a 30% gain on the stock. I'd watch for a dangerous rejection around $1.09, but overall I wouldn't mind riding this short squeeze up to $1.35 if it does gain a lot of volume, maybe even ride it even higher than that. But we want to see volume pick into this, and we need to see retail pick it up. A decent contender. Now take a look at a 21.4% short interest and a 17-day to cover stock. Ticker symbol PRME, Prime Medicine, trading at $6.81. Also not a crazy contender either, but volume is slowly picking up in the stock, still very low for any given ticker. We want to see it hold this trend line. We want to break back over $7.80 and a break over $9.50. Overall, I'd watch this thing run up all the way to about $11.35 before either coming back down or either picking up a lot of volume and getting that move. Again, not a crazy contender, but out of that article, these are the 2 that I think maybe have some potential. Now, Palantir, we know this thing is going crazy. 8% short interest, 2 days to cover, 2.5 days to cover. If I was a short seller, I'd want to get out of this thing. Retail is picking up Palantir like crazy, trading at $19.67, up 7.6% on Friday. Recently had a gap up, still continuing to run, and Palantir is trading alongside all of the other cryptos, just continuing to make higher highs, higher lows, and run into a bull cycle. Now, it's gonna be fighting major resistance soon. When you see one of these stocks start to grow, you really need to see it break this plateau back here of its relative highs. And the same goes for Bitcoin and any other play that you look at on the chart. You need it to break these old support levels that it recently held. Once you snap over that, then you really see a lot of growth in a company. See, like Tesla, the slow build up in the beginning is strength right here, which is what you're seeing. You want to see this continue. Now, before we get into the short squeeze list, if you guys haven't yet, get your free stocks. Use my link, sign up for Moomoo, and make a deposit while the weekend is here. It takes 2 minutes out of your day. Each of these stocks is valued up to $2 grand per stock, so there's no reason not to do so. Just sign up and make a deposit of any amount to start earning stocks from there. The more you deposit, the more benefits you get, but also you're getting free level 2 order book data, so you can see where whales are loading up and dropping off shares, which could essentially help you trade, as well as the best notifications, which is why I like Moomoo, a customizable earnings calendar, access to trading options, going long, going short, and your money's insured. Plus, the uninvested cash that isn't in a stock play earns 5%, so there's really no reason not to be in. That link is in the description and pinned in the top of comments right above the Discord link, which leads me to my next thing. I'm going to be uploading a video probably tonight about the trading challenge, so get in the Discord now while you can. The link is right under the video and in the comments. Go watch the trailer. Press the link, watch the trailer. If you want to join, then join. The trailer's 30 seconds long. Here is the squeeze radar list. Some may apply, some may not. Some may not even be a ticker anymore. This is old squeeze radar from July 15th of 2023, and I'm bringing it back up. Peloton, AI, MMAT, SAVA, IONQ, RGTI, RKT, Palantir, QUBT, GDVM, MJWL, TRKA, AFRM, GNS, COSM, GFAI, Mullen, Sundial, SoFi, XELA, ATER, SOUN, BBIG, Nokia, Carvana, GTII, BuzzFeed, Game, SBET, Canoe, and NKLA. That is what I got for you guys for today's video. Join the Discord so we can talk more on the squeeze radar. Enjoy your weekend. I love you all. Lottery stocks out.